And without any delay, I would like to welcome Wolfgang Haunold on stage to give us his presentation on CBDCs, public money in a digital age.
Yeah, hello also from my side. We have to bring up my presentation. I work for the Austrian National Bank. We are a member of the Euro system, of course. And I will have, this is not the beginning, we'll have the pleasure to introduce you a little bit to central bank digital currencies. We just heard about stable coins, and for me, as a central banker, there were two aspects from Professor Taude's introduction, which show you a little bit how a central bank gets involved. Yeah? The first one was collateral, in the case of a dollar stable coin, was held at a bank. You have a credit risk, and what happens to this stable coin if a bank gets into trouble? The second thing is, of course, you can avoid, so to speak, this credit risk if you would be able to deposit these assets directly at a central bank. I have to go back. This is where actually a central bank balance sheet gets into place. Because in the end, if liquidity is sought after for a stable coin, it always ends up, if there's no use in the real economy, at the central bank balance sheet again. It is deposited at the central bank on the liability side, by a financial institution. This is for a central bank not what you want, because you lend money at a certain rate and you get it deposited where you have to pay the same rate or a very similar rate. So the net lending to the economy is zero. If an economy gets now tokenized a lot, and you use a lot of stable coins, what happens to the central bank? Your net lending becomes smaller and smaller, and there is a certain point where you lose the ability to set short-term rates. So you can no longer steer money market rates. This is what central banks don't like. Now, central bank digital currency, people say, oh, it's a new thing, and the reality is, it is not. Central banks already always have and had a digital currency. It was just not available to the public, to the broad public, to the normal citizens. Financial institutions always have access to a central bank digital currency. They have access to our paying system, which is called Target, or TIPS. We have two payment systems. So central bank money settlement is something in the economy which is very normal. Now, when you look at the retail central bank digital currency, I already gave you a hint why central banks started this project in the first place. And that is a very simple thing, is if stablecoins or tokenized means of payment have an advantage, and we believe they do, then it is very normal that in the economy they get used heavily if you do not offer an alternative. And this would mean central bank net lending would go down and we would lose the ability to steer money market rates. This is a very simple reason to introduce a central bank digital currency to the normal population. There is also another reason. I said net lending becomes zero. If you use cash, let's say a 100-euro bill, a central bank has a unique business model. It's a business model nobody else in the world has. Because we produce these bills, and a $100 bill to produce, let's assume, and I don't give you the real number, let's assume it costs us 20 to 30 cents to produce. But if you want to obtain $100 or €100 bill, you have to give us €100. This is quite nice, no? I get 99 point something, let's say 99.80 as a profit. What does the central bank do with it? A central bank invests in a bond. And the bond over the cycle gets some yield, gives you a return, and the return is probably 3%, 3.5%. Yeah? This income is unique. Nobody else can copy it, and this is called seigniorage. Now, what happens if you pay with an electronic mean of payment, let's say a debit card or a credit card? The answer is quite simple. The income of the central bank is zero. Now, what is the income of the central bank if you pay with a stablecoin? It's the same. The income is zero. Yeah? So what you actually have by the introduction of more and more popular means of payments, you are privatizing public income. You are privatizing seigniorage. So not only would a central bank lose the ability to set short-term rates, central banks or the state would also lose all its income. Oligarchs would get this income, and this is why stable coins are very, very popular in certain jurisdictions, where very rich people already smell the money they can make. What I have also written here, this is more for the people who deal with central bank balance sheets. Yeah? For us, we are completely indifferent whether you use cash or a digital euro. For us, they are very similar, they're almost the same. And a euro is a euro, yeah? So they are treated completely in the same way on on our balance sheet. Yeah? What it does is it gives you access to digital euro to the general public, yeah? And this means for us that all the advantages of a stable coin or other alternatives can now be used using an official, no risks or risk-free money. Yeah? There's no credit risk involved, which, of course, we assume will have a lot of advantages in the economy. Yeah? So what is very, in Austria, we are a little bit, I would say, behind or a little bit traditional. The arguments are always, are you gonna abolish cash? Yeah? And this is, of course, a complete nonsense. The question is not whether we want to abolish cash. The question is, are we gonna see in our economy stable coins being dominant or the digital euro being dominant? This is the real question. Yeah? This is what we are actually trying to solve. Yeah? So, current challenges. We already heard foreign companies are actually quite active in the euro area and the EU, and they are actually dominant in electronic means of payment. Yeah? So whether you pay in a shop with a debit card or a credit card, it's very, very likely that you're using a debit or credit card which is issued by, in this case, an American company. There are actually two American companies which are very dominant in the payments market. And this has some implications, because it means if you want to pay, the US has to facilitate the payment. And this means if the US decides today that they want to stop facilitating the payment, you have in 13 out of 20 euro area countries, you lose the ability to pay. You won't be able to pay, it will not work. And if you look in the case of Austria, what I can also tell you is about a fifth of our ATMs will stop functioning. So not only will you not be able to pay in a shop with your debit or credit card, you will also not be able to pay probably with cash, because you might end up at an ATM where you can't get cash. Yeah? So this means, what I want to say is sovereignty. Europe is very, very vulnerable to foreign political events. And this is something that the Eurosystem of central banks is not going to tolerate forever. Yeah? And this is one of the reasons why the Eurosystem of central banks said, okay, we must work on the European autonomy, yeah? And create a legal tender in a digital form. It's gonna have, and this is also a very important point, we are going to use European infrastructure, hardware, and we are going to use European software. So there will be definitely no dependence on any foreign country in facilitating trade. There are also going to be infrastructure in place which will still function if, for whatever reason, a major country of the euro area stops functioning. Whether it's a natural disaster, whether it's a war, yeah, the rest of Europe is still going to be able to pay. Good. There's another reason why we said we need to introduce something, and that is fewer and fewer people in the euro area pay with cash. This is very, very normal. Yeah? Electronic means of payments offer a lot of advantages. Yeah? And what you see in latest developments where instant payments become popular in the EU is that it's no longer a question of only paying. You get extra value by using a means of payment. Yeah? Whether it's automatic parking fees are paid without you having anything to do in the country and without you caring whether you need to pay in this area, how much you need to pay, it's done automatically. Whether it's some extra benefits coming from the supermarket chain or whatever. Yeah? Austria is unfortunately the only country where there are no concrete projects of introducing such an instant payment solution. Yeah? So we are actually still completely dependent on 2 American suppliers. Yeah? Because what you see is these instant payment solutions where you can pay in shops, they are developed within the EU. Yeah? There are many solutions already in place. What you also have is potential to innovate, yeah, with the digital euro. And this is exactly these extra solutions. The payment goes into behind the curtain. It's no longer important. Yeah? What is important is what you get on top of it. Yeah? A simple use case would be, as I already said, these parking solutions. You could have public transportation, but you could also have areas where today cash can no longer be used, yeah, because there's nobody at the counter, and like car sharing is an example, yeah. But not everybody has access to these private forms of electronic payment. Yeah. So, why are we doing it? I already said one reason, which is the senior rich, and which is the reason, you know, for central banks to go against stable coins. But there's another reason, and that this is very important for us also, is what we call social inclusion. What I mean by that is there is a ever bigger share of our society which is not able to pay electronically, so there's no way for them to go shopping in the digital world. Yeah? They cannot access Amazon offers. Yeah? These are very often poor people, vulnerable people, sick people that cannot access always the digital form of shopping, yeah? Or the digital payment area. They do not get these means of payments. A private solution always tries to make a profit. Central banks we will drive to make it available to everybody. You know, this is one of the key aspects of the Digital Euro project, where the European system of central banks is working very, very heavily. But there's also a third reason I want to say, and this is, when you talk about the European Union, we always hear it in school, there is this common European market, market union. And we hear it like a myth. The reality in payments is that these two card providers have separate contracts in every member state. And they have different levels of fees in every member state. Which means they shield themselves completely from competition. And this also means when they see the chance to charge more, they charge more. Because then they have a monopoly or an oligopoly. There's no private substitute which you can use for payments. And this is, of course, exploited. Why shouldn't they do it? And with the digital euro, the regulation proposal, this is going to be changed. There's going to be a cap on how much can be charged. And this cap is for countries with high fees. Now, I already told you, Austria, we have no private alternative where people really work for. We only have the two credit cards as a solution. We have one of the highest fees levels in all of the EU. That's why so many small shops say, beyond 10 euros, I don't accept payment by debit card or credit card. This is the reason for it. And if you look at payment levels, what does the euro system is also operating an infrastructure on instant payments. We charge for a transaction 0.2 cents, so a fraction of a cent. I talked to a guy who owns a hotel in Vienna, and he has these dispensers for water bottles and Coke and Sprite and whatever. He pays for every transaction 70 cents. This means he has to give away the bottle of water for free, or almost for free. Now, what happens with this money? The money goes, of course, to the payment provider, the company which provides the merchants with all this infrastructure and the mean of payment. 2/3 leaves Austria. 2/3 goes outside the country, leaves the economy. A third or stays probably within our borders and goes to certain banks. And that's why banks do not have any reason to offer a substitute. They earn a lot of money with it. But for the economy, it's not good. This is like an extra tax on private individuals, on merchants, on shopkeepers. And that's a reason why we want to give a boost. Now, if you look, our government, our economic situation is not very good. They try to give economic impulses of, let's say, 1 billion once. We are talking about probably a couple of billions every year, which could stay in Austria every year. Good. Privacy by design. This is also something which is critics always say on the digital euro. This is, you want to know exactly what everybody does. The answer, of course, is no. And that is why the digital euro is going to come in two forms. One is offline, and offline is something, from a technology point of view, it's going to be a token which is going to move. And there's going to be no way, technically, that we will be able to follow it. So if you give the money to somebody else, this is completely private, like you hand over cash. There is one exception where the euro system is going to say, okay, there is something, which is when you go shopping. When it ends up in a shop, suddenly we will see a token and we will need to determine whether it's a genuine one or a falsification. But this is very similar to cash. When you spend cash, cash comes back to the central bank, is sorted and checked whether it's falsification or not. In terms of the online solution, if you go and pay with an electronic means of payment in a shop today, your bank knows what you're doing and the bank of the merchant knows what you're doing. In case of the digital euro, if you use the online function, only your bank is going to know what to do. So it's a little bit better. But of course, when you have an online electronic mean of payment, you have to admit you cannot have 100% privacy. But we will offer an alternative. There's also one thing which I think has been overlooked by the media, and that is distribution by supervised payment service providers. This word is different to banks, and this is what you should remember. The euro system has changed its policy already, who can access the central bank balance sheet. And we did it this year. And it is based on an EU regulation. And what it is supervised payment service providers can now use directly our central bank payment systems to make payments, which means they can open up an account. This is going to be the same with the digital euro. The digital euro is going to be distributed through supervised intermediaries. This is more than banks, much more, and this means competition will be much higher. When you look in today's environment, the competition in small countries like Austria is limited. You have Bank A, Bank B. Maybe you have a credit card company which offers you a special deal, but these are actually branded credit cards. They are normally not that cheap. Merchants in the future in a single market, if you have your bank is your provider, your acquirer, that's the technical term, going into a small shop and telling you, I offer you the service for the EU price cap. The merchant will easily know, because it's going to be made public, what a merchant in another country has to pay. And if it's much cheaper, he has the possibility, we are in a digital world, to sign up with the provider in Portugal, Lithuania, Finland, Greece, wherever. So there is going to be competition introduced in the business of providing services for payments. This is a big development where we are going to drive, and this is a goal what the euro system wants to achieve. Use cases. With a credit or debit card, you can pay normally at the point of sale if it's above 10 euros. Below 10 euros, a lot of shops say no. You can buy e-commerce, this is the Amazons alike. You go into internet, order something, it gets shipped to you. But what you also will be able to do is to pay person to person. So I will be able to send you instantly, in a second, money if I want to do so. And you can then send it again instantly to somebody else. This is a use case which right now the traditional means of payments do not serve. For this we normally use cash or we wire money. The problem with wiring money is what Professor Taudas already has mentioned. It takes so long. It takes more than a day. I mean, more than a day was super fast 100 years ago, but it's not super fast today. So if you are, I don't know, with friends, you are in a restaurant, you share the bill, you can immediately split it and one pays it and gets the money in the same second. So his account doesn't go into the minus, but still one person can pay. This is a big advantage. It is going to work online and offline. So you can pay in the cellar, you can pay on the mountain, you can pay everywhere you like. It's going to work. Then there is something which is also not really looked. It's not only the smartphone with which you can pay, but also the physical card. Why are we talking about a physical card? The problem is that there are people in our society which do not own a mobile phone, a smartphone. And these people are excluded. Yeah? So what a typical example would be is, we want to enable you to pay person to person to a street musician or a beggar who does not own a smartphone on a physical card. And the person who holds the physical card can then go in a shop and buy some food. Yeah, this is a use case. These use cases become more and more, and we want to accommodate that. There's also going to be a digital euro app. Why on earth is the euro system trying to become a software company? Yeah? This is something which you very reluctantly want to do. Well, we have right now the situation in the euro area where certain banks control smaller banks within a chain, yeah? And they can charge like crazy. And to give these small banks or countries with relatively small banks, yeah, who cannot afford to develop their own software, they will get a minimum software from the euro system if they want. Yeah? So that they are not completely, and they have to go to some monopoly or monopoly-like bank or provider, because it's not going to be only a bank. Yeah? It could be a big tech, it could be a coalition of the willing of certain financial institutions, but it could also be stores who hold a payment service license. It could be furniture stores, to give you an example. I don't want to say the name, but where you earn when you pay some EVA points or so, whatever. Yeah? So now everybody knows which store I'm thinking of, but there are going to be a lot. Also, what you will be able to use is QR codes and NFC. QR codes are because they are very simple to produce, and there are a lot of use cases where it makes sense. You can have a piece of paper with your QR code, you hold it in, type in the amount you want to pay, and it's paid. Yeah? Beggars, street musicians are an example. Yeah? There's a discussion in the euro area on holding limits. And this is like, why holding limits? And I must say, what always struck me is, with regards to the euro system of central banks product, the digital euro, the public is always talking about holding limits. Nobody talks about a holding limit on a stable coin. A holding limit is going to be introduced on how many digital euros you can hold on your wallet. The reason for this is that banks fear that citizens will withdraw too much money, which is actually quite interesting. Yeah? You go to your bank, you open up an account, on-site deposit. The bank says, if you want to be able to withdraw the money at any time, I don't pay you any interest. You have to pay me a fee. But now there are lobbying groups saying, I want to block that everybody is able to withdraw the money at any time. Yeah? This is actually something which is, from a legal perspective, I think quite interesting. Yeah? But why would Europe do it? And that is financial stability. Yeah? Because this is actually an act where you legally, by regulation, limit what somebody, an owner, can do of an asset with the asset. And that is something you don't do easily. And the reason is there are financial institutions in the euro area, and there are quite a lot, which will get into trouble if everybody starts withdrawing all their funds at the same time. Yeah, so in terms of stress, when there is a bank run, and everybody says, I want to have central bank money, this could cause a problem. Yeah? Like in today's bank runs, we have the problem that people try to move into cash, which is very similar, but digital money is much quicker. If you look at the collapse of Credit Suisse, Credit Suisse lost over a weekend more than 60 billion in liquidity. And that was the reason why the bank came under pressure. And so if everybody would withdraw instantly, this would be endangering financial stability, so to speak. So that is why a holding limit will be there, but the process of determining the holding limit is going to be public, it's going to be known, everybody can have an idea how this is derived of. It's going to be an interplay between politicians, governments, and central bankers, and it is going to be a part of the regulation, the digital euro regulation. I wanted to introduce something which is the innovation platform the Eurosystem has, which is on pioneers and visionaries. Pioneers are actually testing something. And what is quite interesting, I think, is out of 60 pioneers in the euro area, 7 came from Austria. This is a huge percentage, much more than what our GDP or population share is. And so it shows we have quite a lively, I would say, industry here. Yeah? What all the pioneers did, they tested certain payment use cases for private individuals. One of them, what they always had was conditional payments. Yeah? So if something happens that you pay, and what is important to know is there is going to be a holding limit on digital euros, but there's not going to be a limit on how much you can spend on a payment, because if you run out of euros, you can have an automated refill. And so you can even spend much larger amounts, and this is why conditional payment works. What also is an Austrian innovation is you have in the economy in Austria this discussion on receipts, paper receipts. You go into a shop, you get a receipt, and you throw it away. And of course, there always have been advocates who said, let's get rid of the receipts. No? The problem with that is the receipts are necessary to control tax payments. Yeah? I actually have a Sicilian friend, an Italian. She comes from Sicily. She works at the World Bank. When she moved to Austria, she called me and said, Wolfgang, what are all these people meaning when they say, do you need a receipt? Of course I need a receipt. Yeah? And I was like, yes, well, they don't want to pay taxes. Yeah? So what the solution is definitely not to get rid of receipts. Yeah? What in today's society is a solution, if you have one mean of payment for all citizens in euro area with one data level, which is always the same, is that you introduce digital receipts. Guess what? This is the solution. Yeah? So the solution is not getting rid of a receipt, but it's getting rid of a paper receipt, because the problem is not getting a receipt, the problem is wasting wood. Yeah? That's the problem, wasting paper. Now, I talked about the technical application. I want to a little bit also talk about the legislative process, because in Austria my impression is people are not really informed how this works. To me, this is very astonishing after more than 30 years of membership in the EU, that an average citizen does not have a clue how a directly applicable regulation comes into existence, and that the media, the journalists, don't have a clue. What you have in the beginning is, after lengthy discussions with everybody involved in a certain topic, the Commission makes a proposal, a legislative proposal. What then happens is representatives from each member state start negotiating with the Commission on a compromise proposal. Yeah, this is called working parties. And this is where we are right now with the digital euro regulation. And you always have one member state who is having the presidency for 6 months in the EU area, but now it's Denmark. And what I can tell you is they want to finish in their presidency the legislative proposal which comes from the member states and the Commission and which is then handed over to the Parliament. So we are actually quite close to it. So we expect it, let's say, about within a month. So the digital euro is not something very distant. What happens then is the European Parliament gets involved, and actually they start getting involved when you get very close to a final proposal. They say, okay, explain to me what you are proposing. Why do you have certain articles formulated? And then there is a report by a rapporteur, and this report has been issued, it's already happened, and the Parliament now will start then with the member states and the Commission a so-called trilogue. And we expect actually that definitely within next year we're going to have a final regulation and a vote on it, and then it's passed into law. It might even happen that this happens before summer. Yeah? So we are not that far away from a regulation. And what I also have to say in Austria is, to everybody involved in this, to start trying to lobby to block this regulation is a little bit late. Yeah? You should have done this 6 years ago. Yeah? To wake up and say, oh, I need to block something, it's typical Austria, much too late. Now, how is the Austrian Central Bank involved? And I think this is also something which is not known. The Euro system always works, every member state has representatives in committees. The committees have certain names. One committee is, or committee similar thing, is a high-level task force for the digital euro. And below this task forces, you also always have working groups. Yeah? The committees are below the Governing Council. The Governing Council then makes a final decision. Yeah? So they are the ones where you really prepare things which are proposed from the project steering group. In terms of the Euro system, since it's a payment infrastructure, there are also other committees involved. In each of them, there are representatives from my division. Then there is, together with the market, since it's a payment, since we need rules for how you are going to be able to pay and how you handle fraud and how you handle certain problems, there is a rule book development group which I put here because we do it together with the market. What is not known that much is how we deal with Austrian national stakeholders and the thing to the right. Yeah? In the Euro system, we have a specialization. This is not every central bank does everything, but you have always a couple of central banks developing and then operating things for everybody. Yeah? And their expenses get, of course, reimbursed by everybody, by all member central banks. Otherwise, it would be much too costly, and it would be actually quite stupid. Yeah? If you think of cash, yeah, if Austria would start printing every denomination, yeah, we would have much higher costs than large countries because it's a volume business, and that's the same with infrastructure. Now, normal market infrastructure in the euro area is developed by a group of central banks, which is called the 4 CBs, and they are the large central banks from Germany, France, Spain, and Italy. What is special with the digital euro is that 2 more central banks joined this club for the digital euro, and that is Austria and Lithuania. Yeah? So the digital euro is actually being developed also in Vienna, which is, I think, not known. Yeah? So, and actually I'm one of 3 board members of this endeavor, which creates the digital euro and is going to put the infrastructure in place, and then it's going to run the infrastructure. Yeah? So this is actually, I can tell you, a very, very challenging part of my daily job. What we also have is, of course, an Austrian payments board, yeah? But also we have a dedicated group only now on the digital euro. And what we introduced is that not only banks are part there, yeah? Because the interest in the payment system is not only banks. Yeah? So we, for the first time, we also have universities, Chamber of Labor, and other stakeholders in the thing. What on the project we already did is we started the next phase. So now what we are really doing is we are now really starting to get the digital euro infrastructure on the ground. This is what we are now doing. We started on a smaller scale, but we will, after this regulation is passed, really make a huge thing. Now, there are 2 things I also have to say something, because we had the question on programmable money for financial market participants. Yeah? Professor Taut has already mentioned there is an efficiency gain to what is on the ground right now. And that is the reason that the Euro system started a second digital euro project, which is not known. It's called the wholesale digital euro. And this is we have 2 project names, Pontes and Appia. Pontes is going to be a short-term solution based on some market tests we had with market practitioners last year, where we had actual trades already been settled. Appia is the question, the long-term thing is like, are we going to get into a tokenized infrastructure or not? Are we going to use something else? There we will come to the market with certain announcements, actually rather quickly, I would say, and then we will try to get the public involved, because this has a lot of ramification on how financial markets work. Stable coins, yeah, because I do not want to let you leave with having the impression that the ECB or the European system of central banks is against stable coins. This is not the case. Yeah? I told you the digital euro is going to be a substitute, so to speak, for stable coins, but of course not for every use case. There will be use cases where the central bank has absolutely no clue how they work, or is a time of business where we definitely do not want to get involved with. And so we do not oppose stable coins, and the European Commission is actually trying to loosen a little bit the regulation on stablecoin issuers, and we are in discussions with them to make it actually possible. And so I would guess that you will see more EU-based stablecoin development in the shorter future. Yeah, thanks a lot. And I hope it was quite interesting.